What's going on, everybody? And welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you learn how to trade for yourself. So make sure that you please like this, okay? Please subscribe so this can get out to multiple people, the people that really truly need this information, okay? Please note that anything discussed in this episode is not financial advice, so please do your own research before investing into any stock. So this episode is going to be all about how do I find stocks to invest in. And this is one thing that I see as a big issue for many beginner investors. They see the power of the stock market. They see that people are making money. They understand the concept, but they don't necessarily know what stocks that they should invest in. And so I want to lay out a strategy that I like to utilize in order to invest into the stock market. And so let's just break it down very simple here, okay? Me personally, I like to use a cheat code, okay? Why would I like to use a cheat code? Because a cheat code tends to make the game easier for me. And so the cheat code that I like to utilize is I like to use ETFs to help me find stocks to invest in, okay? So what are ETFs? ETFs are exchange traded funds, okay? That's a fancy way of saying that an ETF tracks a certain basket of companies, either in an index like the S&P 500 or the Dow Jones or the Nasdaq, or it can track companies in a certain sector like the technology sector or the industrial sector or the consumer discretionary sector, right? Or it can track stocks in certain industries like the artificial intelligence industry or the cloud computing industry, right? Or certain areas of communication services, right? Certain baskets of stocks. And so what I'm going to do is I'm going to go through three specific ETFs and look at the similar names and the different names, and let's see if we can find some stocks that we like to invest in. Okay, let's go ahead and get this started. Okay, y'all, so let's start this off by looking at ticker symbol SPY. Okay, this is the largest ETF on the stock market, and this tracks the S&P 500. Okay, and if we look at the assets under management, this stock has about $369.8 billion in terms of assets under management. Okay, so there is a lot of money that is going into this stock every single day. And so if you think about the S&P 500, understand what it is, okay? The S&P 500 is a diversified large cap US index that holds companies across all 11 sectors. And the S&P 500 is composed of selected stocks from 500 issuers, all of which are listed on national stock exchanges and spans over approximately 24 separate industry groups, right? And so when we look at the S&P 500, the S&P 500 is considered the stock market, okay? It is considered the index. And so the top 10 companies in this ETF have to have some kind of backing behind them, okay? They must be kind of good, okay? Not saying that we should invest in them necessarily. Remember to do your own research before investing into any stock, but looking at the top 10 holdings in this ETF will give us an idea of a company or companies that we may want to invest in. And so if we look at the top 10 holdings in this ETF, you've got Apple, Microsoft, Amazon, Alphabet, which is Google Class A, Berkshire Hathaway Class B, Alphabet, Google Shares Class C, ExxonMobil, United Health Group, Nvidia Corporation, and Johnson & Johnson. And so if you look at these are the top 10 companies, okay, in this particular ETF. If you look at the weighting of them, these weightings are in order, right? They're in order. So Apple is the largest, okay, with the number one rating, and Johnson & Johnson is 10th with the smallest weighting. And so what this means is that this is a market cap weighted ETF, okay? A market cap weighted ETF is an ETF that is ranked in order of market cap. So Apple is the largest company in this ETF. And so since this is the top 10 holdings of this particular ETF, Johnson & Johnson is the 10th largest company in this ETF. And I'm giving you this information just to provide a little bit of context around this particular ETF. Now, the top 10 holdings in this ETF tends to change quarter to quarter, year over year, decade over decade. And so what you would like to do is you would like to compare, go back and back test and see what companies were in the top 10 of this ETF previously, which ones have come in, which ones have gone out. And so if we look at this, we see that we have a lot of technology. We've got some consumer discretionary, we got some energy, we have some healthcare, okay, and we have some industrials. And so this is one ETF that you can look at and you can say, hey, what about an Apple? What about an Alphabet Class A? What about a United Health? Okay, the ETF is helping you look at the particular company that you may want to think about investing in, right? The second ETF I want to talk about is QQQ, right? And so QQQ tracks the NASDAQ 100, so the largest 100 companies in the NASDAQ composite. Okay, that's what QQQ tracks. And QQQ tracks a lot of technology companies. If you look at assets under management, it is $151.5 billion in terms of assets under management. So there's a lot of money behind this particular ETF. If I am not mistaken, this is the second most traded stock on the stock exchange on a daily basis. I believe SPY is number one, and I believe QQQ is number two. So what we have to do is we have to look at what are the top 10 holdings in this one. We've got some similarities here. We've got Microsoft, we've got Apple, we've got Amazon, we've got both classes of Google shares. We've got Nvidia. We have a newcomer in Tesla. We have a newcomer in Meta. We have a newcomer in PepsiCo, and we have a newcomer in Broadcom. Okay, so we have technology. So we have, information technology companies. We have consumer discretionary. We have communication services. We have artificial intelligence, right? We have some consumer staples, and we have some semiconductors. So we have, most of these companies are technology companies, but they have different industries associated with them. Pepsi is the only company in this group that I would not consider a technology company. And so here again, we've got some similarities here, right? You see that the big money is investing in certain companies, but they're also investing in certain industries, right? And so the third ETF I want us to look at is going to be the Dow Jones Industrial Average, okay? The third ETF that I want us to look at is going to be the Dow Jones Industrial Average. Now, okay, so the third ETF that I want us to look at is DIA, ticker symbol DIA, which tracks the Dow Jones Industrial Average. Now, the Dow Jones Industrial Average is composed of 30 blue chip US stocks, okay? They're saying right now that the Dow Jones is the oldest continuous barometer of the US stock market and the most widely quoted indicator of the US stock market activity. If you look at assets under management, the Dow Jones has $28.9 billion in assets under management. So it still has a lot of assets under management. And so the Dow Jones, the S&P 500, and the NASDAQ composite are the three largest indexes or indices in the stock market that we particularly track. But the S&P 500 has about 500 companies in it. The NASDAQ 100 has about 100 companies in it. But the Dow Jones has about 30 companies in it. And like I said before, the ticker symbol SPY, ticker symbol QQQ, those are market cap weighted ETFs. The Dow Jones Industrial Average is a price weighted ETF. Okay, so the stock that has the biggest allocation in the Dow Jones has the biggest price in the entire index, not based on market cap. It's based on the specific price of the stock. And so let's look at the top 10 holdings of this ETF, right? We have United Health Group, we have Goldman Sachs, we have Home Depot, we have McDonald's, we have Amgen, we have Caterpillar, we have Microsoft, another familiar name, we have Visa, we have Boeing, and we have Honeywell International. And so in the Dow Jones, more, you have more sectors represented. You've got some financials here. You have some consumer discretionary. You have healthcare. You have industrials. You have technology, right? So you have so many more industries that are allocated, so many more industries and so many more sectors that you can think about in a particular ETF. And so when we look at this, we look at the similarities here. Okay, we look at the similarities. What are similar stocks that I think that I may want to be a part of, right? What companies, okay, are in the SPY and they're in the QQQ and they're in the Dow Jones Industrial Average, right? The answer is really truly right in front of us. We just have to do a little bit of research. And so before we just blindly just say that, hey, we're going to invest into a particular stock, what I want us to do is I want us to do a little bit of research about the stock and at least know what the company does, right? Before we invest into a stock, we at least need to know what the company does and if it even intrigues us. Because what I would say is this: if somebody tells you about a specific stock, or you see a ticker symbol on CNBC or whatever, right, and it's a ticker that you've never seen, or it's a ticker that you may be familiar with, just read the company profile. Read the company profile, read the business summary, and see if this is something that you even want to invest in, right? If this is something that doesn't interest you, or you believe, or is really just not in your wheelhouse to where you really don't understand it, save your time. Don't do any more research behind it, but just read this company profile. And so what I wanted to do is I wanted to bring up Apple. And Apple is a company that we always talk about, but I believe that Apple is one of the easiest companies to understand, one of the easiest businesses to break down. And you want to be investing into companies that are pretty easy to understand. That way you don't have a headache trying to break down these companies. And like I said, Apple is in every single ETF that I just outlined. And so this is Charles Schwab. And so I have my Charles Schwab brokerage here. And the reason why I like Charles Schwab is because Charles Schwab has a very, very good business summary. Okay, they have a very, very good business summary in terms of when I'm looking at stocks. I can say, okay, I'm not very familiar with this stock. Let me go see what this stock actually does. So let me read the first paragraph of here so we can kind of see, okay, what type of information are we getting from the business summary? So Apple designs, manufactures, and markets smartphones, personal computers, tablets, wearables, and accessories worldwide. It also sells various related services. In addition, the company offers iPhone, a line of smartphones, Mac, a line of personal computers, iPad, a line of multi-purpose tablets, and wearables, home and accessories comprising AirPods, Apple TV, Apple Watch, Beats products, and HomePod. And we can go down the entire business summary, but this is a very, very good summary that tells you what the business does, right? And so you can read that and you can say, hey, I know exactly what this business does. If this is something that I actually want to spend my time researching on, then I can dive deeper. Then I can go to the Apple Investor Relations page, go to the 10K or the 10Q or other earnings releases, and then dive any deeper. But I'm telling you, it all starts with finding stocks, okay? Finding stocks that may interest you, and then reading the business summary so you can actually understand what the company actually does. Also, another thing that Charles Schwab shows that I actually like to see is very interesting, right? They show the ETF that are actually holding this company. So you've got XLK, you got FTEC, you got VGT, you got AAPU, and you have IXN. And it also shows you the percentage that the stock has in this particular fund. So Apple is 21.93% of XLK. Is 20.40% of VGT. It's 19.17% of IXN. So this company is a huge weighting in these other ETFs, because if you go back to SPY, Apple was only 6.5% of the ETF. QQQ was only, in QQQ, Apple was only about 11.4% of the ETF. With the Dow Jones Industrial Average, Apple wasn't even in the top 10, so it was less than 4% of the ETF. So, when you look at these particular things, it tends to provide more context, right? It can provide more context, and what can it do? It can provide more companies for you to look at, because these ETFs are going to have other companies in it, right? That are not necessarily in the Dow Jones. Maybe not necessarily be in QQQ, or may not be in SPY, but it may be a company that you may want to spend your time researching and looking into. So in summary, finding stocks to invest in is relatively simple. Just use the ETFs as a cheat code and help you to your advantage. And the ETFs apply across every single industry. So if you're in cybersecurity, all you have to do is just Google the most popular cybersecurity stocks. If you're into artificial intelligence, just Google the most popular artificial intelligence ETFs. If you're into healthcare, if you're into industrials, if you're into engineering, any industry that you have confidence in, whether it's cloud computing, whatever it is, y'all, whatever industry that you are into, use Google to your advantage and just search the ETFs, and that will help you find other companies and other competitors that are in the exact same industry. Look, make sure that you reach out to me in the comments and let me know, what stocks do you want me to talk about? What stocks do you want to research? What stocks are you looking at? And what ETFs do you utilize to help you find stocks, okay? As always, make sure that you like this, make sure that you subscribe, and remember, don't pay for it, trade for it. I'm going to catch y'all in the next episode.